Welcome to the battlefield of wealth, where money never sleeps. This is Greedonomics.
November 2022. In less than 72 hours, one of the biggest cryptocurrency exchanges on Earth completely collapsed. Over 1 million customers suddenly couldn't access their money. Billions of dollars simply disappeared. The company's founder was once called the next Warren Buffett. Just weeks later, he was under arrest. How did a 30-year-old billionaire build a $32 billion empire, only to watch it implode faster than almost any financial company in history? This is the story of the FTX scam.
Crash that has traditional markets on edge. One of the largest exchanges in the world, FTX, collapsed this week after a chain reaction set off by a leaked document that raised questions about the company's finances. Here's a look at how it all went down and the aftershocks now shaking the financial markets by the numbers. $500 million worth of FTT tokens. That's how much a competing exchange called Binance pulled out of FTX following the leak. The sales sent FTT prices plummeting. $6 billion. That's how much investors sold off over a 3-day period, leaving the company scrambling for cash and ultimately agreeing to sell non-U.S. operations to Binance. But then they backed out of the deal, saying that the company's finances could not be saved. The collapse is sending ripples across the financial world. Bitcoin fell 16%. It's now down about 75% from its all-time high a year ago. The Nasdaq dropped about 2.5% yesterday, and the Dow Jones and S&P both fell 2% as the crypto news added to investors' election jitters. And major corporate investors in FTX may be in for huge losses. Sequoia Capital told investors it's marking its $150 million investment down to zero. SoftBank Group and hedge fund Third Point are also major investors. Today, the Securities Commission of the Bahamas, where FTX is based, froze the company's assets and began the process of liquidating.
The currency world is reeling after the meltdown of one of its most popular trading platforms. The exchange, FTX, filed for bankruptcy protection today as fallen crypto king Sam Bankman-Fried stepped down as CEO. CBS's Vladimir Duthier reports on this epic crypto collapse.
Tonight, a stunning crash. FTX CEO Sam Bankman-Fried had become one of the richest men in the world. His net worth was more than $26 billion. It's now down to zero. Along the way, FTX had enlisted high-profile investors like Tom Brady and Steph Curry.
With FTX, I have everything I need to buy, sell, and trade crypto safely.
The company had a Super Bowl ad featuring Larry David.
It's a safe and easy way to get into crypto.
I don't think so.
Bankman-Fried graced the covers of magazines like Forbes and Fortune. He was the next big thing in the financial world, a wonderkin, now in freefall, leaving non-celebrity investors like Evan Luthra angry and stunned.
I thought it was very, very secure. I have lost almost a couple $1 million. So this was a very, very big lesson for me.
It's been a spectacular collapse for Bankman-Fried. On Monday, he posted, "FTX is fine. Assets are fine." By the end of the week, he was in full apology mode.
For years, FTX looked unstoppable. Celebrity endorsements, sports stadium naming rights, political influence, Super Bowl advertisements, magazine covers. Everyone believed one thing: Sam Bankman-Fried was the future of finance. But behind the billion-dollar image, a financial disaster was quietly growing. Sam Bankman-Fried, better known as SBF, started as a trader. In 2019, he launched FTX. Unlike many crypto exchanges, FTX offered advanced trading tools that attracted both retail investors and large institutions. Then came the crypto boom. Bitcoin surged. Ethereum exploded. Millions of new investors entered the market, and FTX grew faster than almost anyone imagined. By early 2022, the company was valued at $32 billion. SBF's personal fortune exceeded $20 billion. He appeared on magazine covers, spoke before lawmakers, and donated millions to political campaigns. The world didn't just trust him, it admired him. But there was one company few people understood: Alameda Research. Officially, it was a crypto trading firm. Unofficially, it would become the center of one of the biggest financial scandals in modern history. Investigators later alleged that customer funds deposited on FTX were secretly funneled to Alameda. Those funds were allegedly used for risky investments, venture deals, political donations, luxury real estate, and to cover trading losses. If true, customers believed their money was sitting safely inside the exchange. Instead, it had allegedly been used elsewhere, and almost nobody knew. Then, everything started falling apart. A leaked balance sheet raised alarming questions about Alameda's finances. Much of its reported assets appeared to depend on FTX's own token, FTT. Confidence vanished almost overnight. Customers rushed to withdraw billions of dollars. It became a classic bank run, except this wasn't a bank, and FTX didn't have enough liquid assets to meet withdrawal requests. Within days, withdrawals stopped. Panic spread across the crypto market. Bitcoin crashed. Other crypto firms faced severe pressure. The dominoes had begun to fall.
Chaos in the world of cryptocurrency. FTX shocked investors by declaring bankruptcy this week. It spent millions making sure its name was seen and known. CBS's Astrid Martinez has more.
The impact of the FTX collapse has been immediate and extensive.
FTX is the safest and easiest way to buy and sell crypto.
The cryptocurrency empire had made a number of expensive sports-related investments, including with Major League Baseball, whose umpires wear the company's logo. And despite a reported $135 million 19-year deal struck just last year, the Miami Heat's FTX Arena will soon have a new name. The team and Miami-Dade County saying the reports about FTX are extremely disappointing.
We're not going to know the full impact of this for weeks, if not months. I compare it to Lehman Brothers.
This week, the multi-billion-dollar company run by Sam Bankman-Fried crashed. The company filed for Chapter 11 bankruptcy Friday, with Bankman-Fried issuing a mea culpa on Twitter. Today, U.S. Treasury Secretary Janet Yellen told Bloomberg that she's convinced this sector demands very careful regulation.
The proper place for this would be for Congress to put some proper legislation in place to really give guardrails for this.
An industry that had boomed, especially during the pandemic, now in free fall. And FTX put out a statement today that it was investigating unauthorized transactions flowing from its accounts. Adriana.
Astrid Martinez, thank you.
On November 11th, 2022, FTX filed for bankruptcy. The company's new CEO, John J. Ray III, the same executive who handled Enron's bankruptcy, made a shocking statement. He said he had never seen such a complete failure of corporate controls. Investigators uncovered missing records, poor accounting, and astonishingly weak internal oversight. One of the world's largest crypto companies had been operating with remarkably little financial discipline. Authorities launched investigations almost immediately. Sam Bankman-Fried was arrested in the Bahamas and later extradited to the United States. Federal prosecutors charged him with multiple offenses, including fraud and conspiracy. Several former executives, including close associates, pleaded guilty and testified during the trial. After weeks of testimony, the jury found Sam Bankman-Fried guilty on multiple fraud-related charges. The verdict marked one of the most significant criminal cases in the history of the cryptocurrency industry. The collapse of FTX wasn't just about cryptocurrency. It exposed what can happen when enormous amounts of money are controlled without adequate transparency, governance, or oversight. For investors around the world, it became a reminder that popularity, celebrity endorsements, and billion-dollar valuations are not guarantees of safety. The scandal also accelerated global discussions about stronger regulation of crypto exchanges and better protection for customer assets. The rise of FTX took just a few years. Its collapse took only a few days. But the consequences will shape the crypto industry for decades. One question still echoes through the financial world. Was FTX simply a reckless business that spiraled out of control? Or one of the largest financial frauds of the modern era? Only history will decide. If you enjoyed this documentary, subscribe for more deep dives into the world's biggest financial crimes, corporate scandals, and true stories. Because sometimes reality is far more unbelievable than fiction.